So the markets opened up about 30 minutes ago, and as of now, things are looking slightly green. We have the S&P 500 up 0.2%. We have the NASDAQ up, same as the S&P up 0.2%. And we have the Dow up 0.1% as the Russell is down 0.2%. And we have the VIX down about 5%. So in this video, we have to break it down. We have to talk about some stocks. We're going to break down some charts, and I want to go over what I'm doing in the markets today. So sit back, relax, take a sip of your coffee, and let's get right into the video. And by the way, I do believe I'm going to be uploading this onto YouTube, and typically I make these morning videos exclusively for my Patreon members. So if you guys are interested in the Patreon, check it out, link down below, and let's get into it. So like I said, the markets are slightly in the green right now, other than the Russell, which again is in the red, and we do have volatility dying down a bit this morning. And as of now, real time, SPY is fighting with the moving averages on the 4-hour chart, which we've been talking about on YouTube, on Patreon. You know, this point 465 is very, very critical. Again, right by the moving averages here on the 4-hour chart, and it's right in the middle of the uptrending channel that SPY's been trading within for about a month and some change at this point in time. So very simple. If we do break out a 465, SPY's probably going to get a leg up. Maybe we do get that Santa Claus rally that everybody's been talking about, but quite honestly, I could care less whether we get the Santa Claus rally, we get the rally in the beginning of next year. I don't really care. But all I do know is, again, if 465 breaks, we're probably going to see some upside here. And for Triple Q, which tracks the NASDAQ 100, this one's on the brinks of breaking out of 390. We're currently at 389.83. This is up about 0.15%, 60 cents right now as we're about 30 minutes into the session. And this one's already breaking the 50 moving average on the 4-hour chart, which is a good sign. But, you know, we're not out of the 180 yet. We have to break the 180, which is at 393, about $3-4 away from where we are now. So I'm telling you guys, if Triple Q starts gaining some steam above 390, especially 392, 393, this could catch fire fairly quickly, and we could be breaking out. It's just that simple. So set your alerts. Watch these guys, SPY and Triple Q, and of course, keep your eyes on Big Tech. As of now, Big Tech is not doing, actually, it's doing pretty decent today. Google's up 1%, Apple's up 0.25%. I think Microsoft, let's see what Microsoft's up. Microsoft is up 0.2%, so this is kind of slightly green, the big tech names. Keep your eyes on those, as again, they influence a lot of the markets. Obviously, they have a huge weighting in the markets, Triple Q and SPY. So what do you guys think? Drop me a comment down below in the comment section. And now let's get into some stocks. We had two that reported earnings this morning. Number one is CarMax, ticker symbol KMX. This is actually funny because it was up in the morning. Take a look here. We were at 144 in the pre-market, right? We closed at 136 yesterday, so we were up at $1.8 or about 6%. And now we're down to 131, so we're actually down about 9% from that 144 pre-market high. So this is a legit roller coaster ride, right? We popped up pre-market, now we're selling off like crazy at open. So let's see what ended up happening. They did a $1.63 EPS versus a $1.44 estimated, so that beat. And sales also beat by a wide margin. Holy crap, take a look at that, guys. $8.5 billion versus $7.53 billion. So double beat for CarMax. They crushed EPS and revenue, and I'm wondering why this is now down. Let's see here. Q3 revenue $8.52 billion versus $5.18 billion. My voice just cracked there, guys. By the way, my throat is a little bit scratchy this morning. Don't worry, I'm not sick. I don't have Omicron or whatever, but my throat is a little bit scratchy this morning, if you guys couldn't tell already. So they crushed earnings compared to, or revenue at least, compared to what it was a year ago. Holy crap. A year ago, it was $5.1 billion. This year, 8.5. That is unreal. That's definitely because of the inflation, the rising prices of these cars. and there's just strong demand. It says here, sales on strong car demand. It makes sense, guys, and I'm wondering why this is selling off. Were the earnings not as good as expected? I have no idea. But overall, this could be an entry point. No joke. It's towards the bottom of the channel here on the 4-hour chart. As long as we hold above 130 to 132, which we are as of now, as long as we hold that point, I think CarMax could be a decent dip buy, but we have to give it some time, maybe a day or two or at least a couple of hours to see how the stock pans out for the rest of the day, or at least the beginning of the day. Do we consolidate? Does this falling knife continue? I want to give it some time. And another one that reported this morning is Paychex, ticker symbol Pay, or PAYX. And this one's up close to 6% today. It just hit a high on the 4-hour chart, which is probably an all-time high, as most stocks these days are at all-time highs. Yep. It hit an all-time high today, guys. And if you didn't know, Paychex is a provider of integrated human capital management solutions for payroll, human resource, retirement, and insurance services for small to medium-sized businesses in the United States. So let's see what they ended up doing. They ended up doing 91 cents EPS versus 80 cents, so that beat. Sales came in at $1.11 billion versus $1.06 billion, so they double beat EPS and revenue. And let's see here, they expect higher full year revenue growth, which is good. They raised the full year 22 outlook. I want to see by what metrics are they raising it, or what are the metrics, right? Let's see here. I'm not necessarily seeing it, but overall, they're raising guidance, which is great. We always want to see that. Oh, here it is. Full year 22 revenue outlook from 4.38 to 4.46 to 4.5 versus the 4.4 billion estimate. So they raised their EPS, their revenue, and the stock is ripping. So at this point in time, I would not FOMO into it. Again, we just hit an all-time high. We're pretty overbought on the 4-hour chart here. RSI is screaming red, so I would wait a little bit to see if it pulls back. Maybe if it starts coming down mid-120s again, by the moving averages on the 4-hour chart, that could end up being an opportunity. So keep your eyes on Paychex, guys. DKS, Dick's Sporting Goods, is another one. I was reading this morning that they're issuing a buyback. Let me double check and make sure I'm not off the off pace here, or not off pace, off the ball here. Let me see. That was actually a couple of days ago. Wow, so I might be a little bit late on that news. But yeah, Dick's Sporting Goods authorizes repurchase of additional $2 billion of common shares. That was 5 days ago on the 17th of December. And I remember they reported earnings. The earnings report 2 quarters ago was great. The one recently, I guess, wasn't as good, considering the stock went from 145. Now it's at 103 since they reported earnings. But overall, guys, this stock is down a lot. I mean, it is down 30% from the recent 147 high. That was back in the beginning of September. So I want to see if it slowly starts reversing, which is not showing signs of yet. In fact, we're down about 0.5% today. We're getting hit by the 50 moving average on the 4-hour chart, which we need to break. So I'm going to put my alert at excuse me, guys, $108 per share. If that point breaks, we might see a little bit of a move, maybe towards 120, right by the 180 SMA here. If that breaks, we might be going back 130, 140, but it's just way too early to tell. So set your alerts, be patient, and I'm watching Dick's Sporting Goods, guys, DKS. I think it's looking pretty solid. All it needs to do is confirm that reversal. And by the way, I'm noticing a bullish divergence as well here on the 4-hour chart, which is always great. So the next one is LYV, Live Nation, which, did we not call this out a couple of days ago? Did we not call this out? This went from $127 back in the beginning of November down to about $99, $100. So it trimmed about 25%, a little bit less of its value. So it got into a bear market. And I told you guys, look, it's trading in a wedge. It might break out. And with Omicron, the whole New York City's getting destroyed right now. Well, not necessarily destroyed, but, you know, a lot of those cases are going up. Live Nation, it went down a little bit more, but now it seems like a lot of these stocks are shaking the Omicron fears, and this one's just completely breaking out. It's crazy because this would be a stock or a company that gets affected by restrictions or lockdowns or whatever. But it seems like people just don't care anymore because the stock is just breaking out. I mean, we took the wedge out. We're above the moving averages. We took out the highs from earlier in December. So this one's in full-out breakout mode. So I want to see if it continues this momentum into the 120s, mid-high 120s. I think that's possible. So watch out for Live Nation and ZIM. ZIM's another one. I made a video on YouTube about this one, how I think long-term wise, it's a trap. I think the dividend that they pay right now is 20%. Sure, it might be sustainable for another quarter, 2, 3 quarters, but in 2, 3, 4, 5 years from now, will they be paying a 20% dividend? I highly doubt it. I highly doubt it. So as a longer-term play, I don't like it. But as a short-term trade, I like it. I really do like it. You know, we're holding an uptrend. We're in an ascending triangle. We're now breaking out of the 50 and testing the 180 moving average on the 4-hour chart. So I'm going to put my alert at $52. Maybe 52.50. Let's do 52.50. I'll put my alert there. If that point breaks, there's a wide open gap from 53 to $60 per share. That is where ZIM will probably be going, because I don't want to say it's a hype stock, but a lot of people have been talking about it. A lot of people are excited. And the truth is, when there's a very high dividend, that lures people in for better or for worse. And for me, again, guys, I would not invest in this as a reliable dividend paying stock. When you want to invest in a reliable dividend paying stock or company, you want to see a long track record. You want to see 10, 15 plus years at least of dividend payments, and I don't think they've been paying a dividend that long. So yeah, keep your eyes on those stocks: CarMax, Paychex, Dick's Sporting Goods, Live Nation, ZIM. All of these are setting up pretty nicely for the most part. And for me, guys, today I'm going to be monitoring my positions. You guys know I've been buying a little bit of Activision recently. I bought some, I believe it was last week, at $58. I bought more yesterday at about 61 something, I think. And now Activision's pushing $64, and this one's on the brinks of breaking out. Not quite yet, but it's on the verge of doing that. So Activision's one I've been buying. I want to buy more of this one. Smith & Wesson's another one that I've been buying, guys. I bought some initially at $17.80. I think I bought more recently about a day or two ago at $17.40, something like that. So these are two stocks I'm actively buying and looking to buy more of. SoFi is another one that I bought about a week or two ago at $14.40, and now we're pushing above $15, and I do want to buy more SoFi. This is one of those that I truly believe could be a buy the breakout stock. Now it's slowly trying to break out of the downtrend. It's not there quite yet. But if we start breaking mid-15s, SoFi is probably going to start going 16, 17. That's where I'd consider adding more, because I think this is a $20+ stock. And I'm sure a lot of you guys out there will agree with me on that. So I'm focusing on SoFi, Activision, what's the other one? Smith & Wesson, and I'm just looking to sell covered calls potentially on these plays as well, but I just haven't done it quite yet. So that's it. I'm going to wrap the video up here. Hope you guys enjoyed it. If you did, hit the like button, subscribe, drop me a comment. And again, I typically make these videos for Patreon members, for my top tier patrons, every single trading day. But today I figured, let me make this for YouTube as well, so you guys get a bit of a taste of what's going on. So yeah, if you want to join the Patreon, it's linked down below. You get these morning videos, and you get all my buys, sells, call outs, more access to me. You get a bunch of stuff, guys. So check the Patreon out, link down below. Get your 5 stocks from Webull as well, and your $50 from M1 Finance, also linked down below. And with that being said, I'll catch you guys in the next video. Thanks for watching. As always, keep crushing the markets. Stay safe out there. Peace out.